Hey folks, all right, let's going to get started today, and we want to go ahead and get through the disclaimer so that we can get out to the charts. A lot of kind of stuff to, let me pause that, sorry. Yeah, a lot of stuff to get at today and discuss and so on and so forth. First and foremost, what I would like to do is just inform you this is for educational purposes only. Trading, as we most likely all know, contains substantial risks, so we always want to be aware of that, not just from a trading standpoint, but there are inherent risks otherwise as well, power outages, internet loss, etc. Okay, so things that can always arise. If you ever have any questions and want to discuss those things, please let me know. We always try to help our members mitigate those types of issues to the best of our ability, right? Okay, so please read through the disclaimer in its entirety. Understand I'm not a professional licensed fund manager of any sort. I'm not a CTA, not a registered broker, etc. Simply an educator here to provide the information. Okay. All right. Let's go ahead and get started. I'm going to put you all out to the charts here. So just 1 second, please. I'll just kind of shift this over. Let's see. We're going to this desktop. Excellent. Okay. All right, folks, there we go. Now, let's see what's what, and I want to maybe make a change real quick. I just want to jump right into it. You know, the market's volatile. It's moving abruptly, so you know things are going to happen very fast. What I like to do is just get right into it. Okay. I like to have some fun and so on, but ultimately we need to use the tool to you know, display the absolute benefits of the order suite and so on. Now, with that in mind, understand that with the order suite alone, we're going to talk about a couple of products today, and we'll go through some analysis and things to that extent. What I want you to first and foremost understand is that the order suite would be here to the right. Okay, in other words, 1, 2, 3, 4 icons in total. So this is going to be the user inputs, the settings, if you will. We have our own custom user inputs, simply put, because it's a suite. We call it our PFA suite because it is very robust in its nature, lots and lots and lots of features and capabilities. So the NinjaTrader system, the infrastructure, is really not designed to handle you know, things like that. Once you get to a certain point, it's a matter of you got to go out and do it, build it yourself, because there's simply too many settings and things like that. Now, with that in mind, we want to point out the fact that there's no need to feel overwhelmed or anything like that. Basically, it comes, for the most part, right out of the box. I know that's not proper terminology, but it's the expression I think you'll understand. So it's kind of ready to go. If you have any questions, as always, documentation, tutorials, support, we are always here to assist you with any of that. So again, we have our settings. We'll look at this in a moment. Here, again, we're going to talk about the PFAOrderSuite first and foremost, and that is going to provide access to 1, 2, and again 3 menus with this little icon as well, which you know effectively just hides. It cleans up the chart. We like everything directly on the chart. If you're anything like us, we prefer clean charts. You know, we don't want a lot of mess on our charts. It just our own personal preferences here, but that's one way. So we just kind of clean up the chart, and literally all you have there is a very small icon if you desire. But of course, in order to utilize the functionality, we need to bring those icons out where they become usable. Now, we'll further talk about our PFAZoneSuite, which includes the order suite. So the order suite is a trade management tool. It allows us to do ample amounts of things, right? We're going to amplify essentially everything we do with order management. Okay, and we'll talk about lots and lots of things today. I'm going to try to move as promptly as possible. Please let me know if you have questions throughout. Now, again, the order suite, trade management, if you will. Okay, and when we move to the left, you can see that this here is what we call our tools menu, and there's a plethora of different options in here. Again, all of this comes with our PFAZoneSuite, but these are tools. A lot of them are unique to our own methodology and so on, and a lot of them are not. I mean, ultimately a trail stop is a trail stop, right? It's pretty basic. We have it for automation purposes. It allows, so for example, if I toggle this on as I'm talking about it, I can just literally toggle that on, And this provides us the ability to do exactly what you think, right? So we can have both an ATR version as well as a swing version and toggle that directly on or off from the user input menu here, okay? So again, these are just a bunch of tools. We can come and look at those momentarily. And then finally over here we have a rectangle icon. This is our zones. So you're going to see zones here. And then if I go down, I could also turn on my demand zones as well. I can toggle them both on and off and so on. So some, features, if you will. Again, as we get further into this, we will talk more about that. But right now I want to get started with the order suite and all of its vast capabilities. So let's talk about, before we get into that, I'm going to make a couple things I want to do. And I don't want to be all over the board, but like I said, we like to keep things simple, okay? We want to keep it fun, interactive, things to that extent, and we don't want to come in and just hound you with PowerPoint and be so very structured. We find that can, it's maybe sometimes not the most fun. So again, as I said when we started this, I like to be a little bit more proactive. Just go ahead and get right into it, start using it, okay? All right, so with that, I'm going to incidentally make a mistake here. Okay, and I'm going to make a mistake because I want to discuss some of the features built into the order suite. So you can see this red label right here, okay? That's going to be our stop. And as you can see on our stop, we have multiple pieces of information for this particular trade. Now, there you go. What you didn't see is the target up here. And again, so much to talk about, so please please just bear with me and I'll get to all of it. Okay, so we can color code these any way we desire. Understand that everything you're going to see today is customizable. So for example, anything from the color to the text size, if we alter the text size and enlarge this, our labels become larger, so on. I mean, again, all of this is extremely customizable, but as I said, it comes right out of the box, so you don't really need to make these changes. I think we've implemented this in a way that's pretty straightforward. It's across the board, very common. For example, stops are red, targets are green, that type of thing, okay? Or like a bright green, yeah? So we'll look at that as well. But again, we have the number of contracts here. This is the information on the label. So if I go like this, we can see that we have number of contracts. This is a long position, right? And we want to be aware of that one on each label, because the simple fact that I need to understand and conceptualize this is an OCO and or a bracket order, which is of course attached to the open position. All right, so this is a long position. This is going to be the target for the long position. This is the stop for the long position. We've already hit what we call our trigger line, so that's where I'm going to make a mistake in just a moment and show you that as well. We have, of course, the instrument. Now that might be silly, right? Because you're thinking, well, why would I need the instrument when the instrument's right there? Once we get into the features and the capabilities here, you'll definitely understand why we want that. And just to touch on it really quick, our software is capable of submitting entries to any market. Okay, for example, right here, yes indeed, we are on the E-mini S&P futures contract, but what if I wanted to submit entries based off of this chart, but have them submit to the micro E-mini? Okay. Another thing that we can do, and this is where a lot of times you get limited with other softwares and things like that, we don't stop there. So we could submit it to any market. For all intents and purposes, if I want to use the S&P here as my data, if you will, make decisions based on it, I can do that, and then I can go into the settings and alter what we call our hedge instrument, and I can put that to anything I want. So what's another benefit of that? Why would I want to use different markets, right, as opposed to, say, just what we call, like, for example, in trade copiers and things to that extent, they have a very nice feature called a cross, or crossover is a typical, it's what it's typically the nomenclature, if you will, okay, or naming convention, yeah? So that's great. It's a wonderful feature. But with our software, it's not limited to just a cross. So instead of doing the cross, I could come set my hedge instrument to the SPY, okay? So what if I want to, and this is a very common scenario, by the way, especially that we would use. In fact, this is essentially the reason that we built it in the beginning, is for hedging purposes. So you can invert that. Let's say that I put the market on SPY, which is the S&P 500 ETF fund, but I want to hedge my position, right? So maybe I'm long the market, but I want to go ahead and hedge against it utilizing the futures market. Okay, so what I can do is specify the desired instrument here, and then I can be on any chart. So if I'm on the SPY, I can specify a hedge instrument of the E-mini futures, and regardless of what chart or instrument I'm on, it's always going to submit the entries to this particular market. So right now I could set my hedge instrument to SPY. I could set it to MES, which is the micro version of the E-mini. Any market that I desire, I can make that alteration. Okay? Of course, there's the price value. That one kind of goes without saying that we need, right? We have risk and reward. This is going to come in both in a currency value as well as tick or pip value. And then finally, we have our account in which the orders are being submitted to. Similarly to, let's say, what we were just referring to, the market, we can also make changes to the account. So for example, I could, in my primary menu, now we're going to notate these, primary and secondary is what they're called. Okay, so in the primary menu in the settings, I could say I want to submit entries to this market, meaning the S&P, in this account. Okay, great. Now I can go to my secondary menu and I could say I want to submit entries to the micro E-mini, not this market, the micro version, on a different account. Okay, and all I have to do is just make those alterations in the settings and then come here, and what you'll notice is when you hover your mouse, it shows you right there the market is the S&P 0324, the account is SIM 101. Now if I hover my mouse over the secondary, it says also the same thing currently because I haven't made any changes. Alright, so again, just features, bells and whistles. These features, the functionality, I can't even tell you how excited we are. We've been working on this for a very long time, and been using it again for a very long time. We're just trying to get it out to folks now because we're just super excited about it. But it amplifies everything we do with managing a trade. Now, they work, for example, trade copiers, prop funding, things to this extent. That's where this comes very handy. Okay, I may have a proprietary funded account. Okay, so then I can specify that account in my settings. Maybe some of you are using, a prop fund, trying to get funded or what have you. That's great. I think those are wonderful programs. Okay, but that being said, we can specify that account here, and if I wanted to, if I had more than one account, I could put, funded account number 1 here, funded account number 2 in the secondary, and I could literally trade both of those without ever leaving the chart. So for example, let's pretend for a moment that I wanted to sell the market, take a short position, if we make a higher high. All right, so it's just a hypothetical here. But do you see how the distance, right? So there's a long, right? So here's my bracket order, just like that. So this is going to be the stop. This is the target for the long. And then over here we have a short, 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 and short. Okay? So that's the entirety of the bracket order on the short side of the market. And as I said before, I've not made a change to it, but what I could do is come and make that the micro, and I could change this to, say, SIM 102 or whatever my prop funding account is. Now, let's take it a step further. Let's say that I have, I know that some of the funding, the prop funds will provide multiple accounts, okay? So you could go and you could have, I think you could have like maybe 20 accounts. In the event that that happens, we can amplify continuously, right? So no matter how we shake a stick at this, we can amplify our abilities. I could still do all of this. What if I wanted to take 10 of those accounts and have a long-only portfolio? And then I wanted to take the other 10 accounts and I wanted to have a long and short portfolio. Or if I wanted to trade 10 accounts or however many, some of the accounts with the E-mini, and then I wanted to trade the remaining accounts with the micro E-mini. What I'm trying to point out is you can literally achieve that all from right here. We don't need to go all over the place, right? All we need to do is just focus as it is right here. And we can conveniently toggle these on or off, and we're going to go through some of the settings here, or rather try to get through all of them. And you're going to notice that our software intuitively recognizes things, okay? So right here we see that there's a lot of options. If I go to this menu, there are not, okay? The reason for that is because I submitted a trade, and I do have an open position in the primary menu here. So what that does is it says, okay, well, obviously I can't go in, I don't need all of this other functionality currently. What I do need, however, is the ability to manage that open position. So what this does, this is what we call our scaling capabilities, okay? So let's say that you have a strategy or a methodology, means of trading, and you like to scale in and out of positions, dollar cost averaging, things to that extent, all right? So what you can do is you can literally come in here and add to the position and or remove from the position. So right now I have a total of 5 contracts. If I wanted to say add, another contract or 5 or however many I would like to add, I can go in and literally click add to position, and I can adapt that, move it wherever I want. So I may want to move my target up to say 49.20, and then if I break this prior structure high, I would like to add another contract or multiple contracts. So for all intents and purposes, let's pretend that I want to add another 2 contracts. Conveniently, we can go right here to the plus or minus, and I can simply increase and or decrease, and I can increment that value up or down. So when I'm happy with it, let's say I want to add 2, okay, I've incremented that, and now I just simply want to submit that order. Okay. Note, of course, it is not going to do anything because we haven't gone up to that particular price level. So if and when we touch 48.37 3/4, of course, that's when our entry would be executed. All right. Now, another thing to discuss in regards to this is the trigger line situation versus our, we call them trigger lines. So it's trigger lines versus a default value. The default method is simply utilizing NinjaTrader's orders. Okay, so if I were using the default version, right now I'm using trigger lines, but if I wanted to use the default version, just like if I were to go up here and submit an order, right? So for example, I could go up here and try to add one, buy stop market. Okay, so you see that there is a NinjaTrader order. Now that's what we use as our default. Oh, it's gonna see if I can, it's hitting the arrow. There we go. Okay, so for all intents and purposes, the trigger lines, not intentionally, but the benefit of them will be that your orders are not seen on the exchange. Okay, so again, not intentionally hiding orders, but ultimately that is the function of it, is to not display those on the exchange. We don't want those to be seen. This becomes most advantageous for scalp trading, things like that. You don't really, maybe you're having an issue with your stops getting swept, things to that extent, okay? And a lot of times the reason for that is simply because they can see your stops, especially market makers and especially on the smaller time frames. They can come there and they can see where your stop is. They can go right down, sweep it, and then going in your desired direction, which can, of course, be very frustrating, right? It's not a good situation when that occurs. All right, so using the trigger line method here, that's not going to be an issue. For example, the stop, right? I currently have the stop, let's say, below the structure. They don't know about that. No one does. The only person that would know about that would be myself, as it is here on my machine, and will not be executed until it is touched. Okay? Now, again, if I wanted to make this default, I could, and then at such point, all of these would be, they would look just like the order I submitted a moment ago. It's still controllable, and you can manipulate it as you prefer, as you see fit. So the only difference, again, is the visual aspect of the label in itself. It would be a NinjaTrader appeared order as opposed to our order label visually. Okay? All right, so we can do things like that. As I said, just some of the notable features here. We can submit to multiple markets. We can submit to multiple accounts. We can add and remove positions, i.e. scaling in and out of the trades, okay? What if I don't, I made the decision, I say, no, I want to cancel that, okay? So all I have to do is go click that cancel button, and all is well. Okay, so now no matter what I do, that's not going to be executed, right? Even though it's touching it, it's not going to be executed because I've canceled it. So I would have to go back, manipulate this, put it wherever I want, and then resubmit that order. Okay? If I don't want to see it, I can simply go toggle that off. And if I'm happy with the profit that I have right now, I could simply go here and remove from the position. So I'm going to toggle this one on, and notice how, again, intuitively, it is only displaying what is usable at the current moment. So if I said to myself, you know what, I'm happy with this profit, and or I want to just simply scale out of the position, maybe I am very thrilled with it at 48.14. So what I can do is take this down, let's call it, 48.14. I can submit that, okay? And I want you to notice a couple of things, the risk and reward, and so on. All of these things, being updated if and when 48.14 is touched. There we go. Okay, so what it's now done, okay, is it's decreased the contract, of course, by 1 because that's what we specified. Additionally, it has updated the values on the currency side of things, okay? So let's say that, okay, well, I've removed a contract, now I just want to protect that investment. So I'm going to move my stop up to break even plus commissions just like that. Keep it very simple. Let's go back to the beginning where I said I was going to intentionally make a mistake. This happens, okay? Mistakes happen all the time. That's fine. The mistakes are mistakes. We all make them. The point is, how do you handle the mistakes, right? So I go here, I reload, okay? I've reloaded my NinjaScript, or I lost internet connectivity, or I lost power, or one of the myriad of things that could, of course, occur. In that scenario, if you will, I have a naked position, right? Uh-oh, that's not good. So understand, back to the menus we go, right? Now there's another option here called Attach OCO. Of course, there's your close position button as well. So if we want to just do all this super fast and we're just saying, no, I need to liquidate this position, I could, of course, hit the close button, and that is, of course, liquidated. Now, let's say that I don't want to do that. I'm still happy with it. I want to keep it at break-even plus commissions. I need to be able to do this all extraordinarily fast. So I'm going to go here. I'm going to attach an OCO, and I'm going to bring that, and adjust it accordingly so I could put my stop back up wherever I wanted it. And as I said before, you will now see what we call our trigger line. I'll show you how that functions. As a matter of fact, let's just use it right now. So I'm going to go down here. Okay, I can touch any of the entry or target labels, and I have my submit button. What this is going to do, number one, it intuitively recognized that there was indeed a position for contracts. Okay, it's going to track the currency, the risks, everything's going to be the same. I need to now submit that. Okay, if I don't submit it, obviously the entry is not going to be active. Okay, when the entry is active, you'll see the label down here notating such. Now, the trigger line, maybe it hasn't reached it yet, but in our case it has. So what the trigger line does, okay, if I drop this and bring this down, touch current price, okay, note how it automatically moved my stop to break even plus commissions. So again, everything is customizable. So in the event that I want to move this 2 ticks, 10 ticks, 3 ticks, or whatever your break-even plus commission point is, it could be different for everyone, that can be altered in the settings. We can increment that, and I'll go ahead and open these settings real quick so we can discuss that. Okay, so in the settings, we go to our order inputs, and there's a plethora of settings. But this is where I think, this is where we start to shine as far as the functionality, okay? Because if we go in here, again, don't feel overwhelmed. Let me explain what all of these are. We have taken and provided the ability to make alterations, not just the standard way, though, right? Because we've been doing this for a very long time, and through trading and things like that, we just realized what we need for convenience purposes. I would also like to notate that we never go in and build features and functionality just for the sake of it. We actually have a suggestion box for members and all of that, and we decline, some of them because it's very seldom, but we do decline some of them because it's not very applicable or we don't find it to be extremely user-friendly, something to that extent. But we do want to provide as much flexibility as possible. And let me explain why. I'm going to give you a good example here, okay? So we have the entry, stop, as well as our target, our exit orders. This is going to be the type of order in which it is. So it can either be a market and or a limit order. Our software will intuitively recognize if we are above or below current price and when the orders are submitted, things to that extent. So when we say it's going to be a market or a limit order, if we place an entry above, let's say we go here and we place a long entry on the break of this prior structure high, the software intuitively recognizes that that must be a stop limit order, okay? We don't need to specify that here. We just need to know, okay, well, we obviously know it's going to be a stop order, but what type of stop order? Is it going to be a stop limit? Is it going to be a stop market, okay? And it will do the rest for us. Now, why would we do this? Because this is not very common. Meaning, honestly, I don't know that I've ever, I don't think I've ever seen a piece of software. I could be wrong. I'm not saying that there isn't, but I've never seen one that breaks it apart like we're doing here. But again, there's always a method to our madness. Let me explain why. Some brokers will not accept market orders in the overnight session. Okay, so most especially if we're trading equities, you're going to run into an issue there because most often, a lot of brokers will not accept a market order in the overnight. So what I could do is I could come here and say, well, okay, maybe I'm going to try to enter my positions during the day, but I want to make sure that my stop, is functioning properly in the overnight. So I may have to come and use limit. Now, in my opinion, that is not ideal because as a stop order, when the stop is reached, I want to be out of that position no matter what. Okay? If we're using a stop limit order as the exit, as the actual stop in and of itself for risk management, that does become a little bit problematic. Okay? And the reason, apologies for the noise in the background, it appears that there are the office landscapers, so we'll just kind of handle that. But, okay, so again, in the event that the stop order is being submitted in the overnight and or maintained, we need to contact our broker and see if that's a possibility. Can I have a market order in the overnight? Now, to share a little bit of experience with you, this is not necessarily super applicable to the futures markets. I don't think I've seen a futures broker who doesn't allow market orders in the overnight. Doesn't mean that it's the right or safe thing to do, but typically you would be able to do that. Again, if you're trading equities, is a very different picture. Okay? That would be considered a very different picture. And again, it most likely would not be allowed. Okay, so why did we add all three and give you the ability to determine not only just, hey, submit all market orders or, hey, submit all limit orders? No, we want to individualize those, the entry, the stops, as well as the targets. Okay? Each and every one has its own setting. Similarly, we can go to the time in force. We've also implemented a time in force for the entry as well as the exits. Okay? Again, why is that applicable? Because the same thing. Some brokers don't let you submit certain certain time in force during or outside of standard trading hours. So we have those abilities because we found them to be necessary from time to time. All right? Let's discuss my opinion on this matter. I predominantly trade futures markets, so it's it's not a huge thing. Okay? Again, it is a huge thing when I'm maybe in the hypothetical earlier, if I'm trading the SPY and then I'm hedging with the futures. That's where this comes in and shines. So at such point, I could say, okay, well, we're going to submit some good till canceled here, but I may have to use a limit if I'm, again, pretend I'm on the SPY for just a moment, yeah? So I may have to use limit orders for all intents and purposes, so I could do this, and submit all limit orders, and then conversely on the secondary menu, which I would be hedging with, right, I could leave those on market. So for example, this would be my equities. I would submit equities directly from my primary menu. I would submit the hedge futures trades from my secondary menu. And by doing that, as I said before, I can go specify the corresponding account. Notice there's account here, and then you have account down here. Let's run through some of the other settings here. See where it says hedge instrument? So this is where I'll make that alteration, and then I'll actually go out and show that to you. So let's use an easy scenario here for, I think this could be probably the most common way that this would ever be used for the majority of traders, but again, it could, it's not limited to this, okay? So let's go back to the scenario where I want to trade the E-mini, but I want to submit orders to the micro, and maybe I specify the ability to do both. So up here, I'm going to say, okay, in account sim 101, right, I want you to just submit the orders to the market in itself, meaning the market that's on the chart. In this case, it's the E-mini futures contract. Now, that's great, so I don't need to select a hedge instrument. Just leave that blank, leave it empty. There's no need for it, right? And where I specify the difference is right here where it says submit orders to. Do I want them to go to the default instrument and or do I want them to go to the hedge instrument? Of course, if I specify hedge instrument, now I need to go give it a hedge instrument. Okay? Yeah. So I need to specify what that's going to be. Right here, I'm going to leave the primary on default. I can specify the trigger lines and or default method. So let's switch this to default because I want you to see what that actually does, how it functions, all right? So on the primary menu, I'm saying submit orders to Sim 101. Don't worry about this because I want them to go to the chart market, the instrument that is displayed on the chart. I want to use the default method because I want my orders to be submitted directly to the exchange and therefore sit on the exchange for whatever reason, okay? You may feel more comfortable with that, perfectly fine. I'm going to go ahead and use good till canceled on both, and I'm going to go ahead and use market orders because I'm trading the futures markets. I feel very comfortable with that. Now, I want to put this out there real quick. In my experience, long ago, I would have never said this. I've just evolved in certain ways. I would have never used market orders because I was conditioned to think that I shouldn't do that. I almost exclusively use market orders these days. I love them. And it just is what it is. I find, and I'm not advocating for this because I think you should make your own determination and really research this. The problem with it is it's not a blanket statement. So if I'm trading a certain commodity or currency or something other than the absolute broad markets, I may not want to use market orders because the slippage, we may incur, a much greater amount of slippage. So that's never a good thing, right? But on the S&P futures, I just don't have a problem with it myself. And again, you need to go make your own determination, but that's how I prefer it. Okay? So I'm going to leave these on market. Entry offset, nah. I just want it to be submitted directly where I execute the order. Okay? And I don't need a stop limit offset because I'm not using limit orders, right? I'm using market orders, which essentially means just fill the order as soon as the label is touched. Now down here we have our OCO bracket. We can toggle this on or off as well as our break even. Do we want to break even within our OCO bracket? I'll talk about this momentarily, excuse me. But we can do all of this directly. So if I go into my secondary, you see these options here. I can literally just toggle those directly from the chart. You're really not going to need to go into these settings, almost never. If you have a consistent way of doing things, we would just go here, complete it the first time, and then really be done with it. Okay, so in this scenario, I want to trade the E-mini, but I also want to trade the micro, and maybe I'm doing that for hedging purposes, or, again, I don't know. I mean, there are massive amounts of reasons that we would do some of these things, okay? So I'm going to go down here, however, and I'm going to specify Sim 102, right? So let's pretend that we're doing that prop trading and we got two accounts. Well, up here I can specify prop account number 1, down here prop account number 2. Okay? In this case, I want it to go to the hedge instrument. So as I said before, I need to now specify what that is. If I click the drop down, I can see MES there, so that's the micro version of the S&P E-mini futures contract. And that's going to be my hedge instrument. So anytime I submit an order using the secondary menu, it is going to Sim 102 and the micro S&P. Now in this case, I'm going to use the trigger lines because I do want to see the difference in the two. I'll keep it good till canceled and market orders because, again, I'm trading the futures market. I feel very comfortable with that. I'm going to leave my OCO and break even on. We will come back to the entry zone and how to adapt to that. Now that's a very cool feature, very unique. Again, I've never seen anything like that, and that's just how how it is. Let's get through one thing before jumping to the next. Okay, all of these are just the customizable features. You can go through all of that. We can toggle off the risk and reward, right? So for example, if I don't want to see certain things, just turn them off right here. I can turn off the risk and reward and ticks and currency. I could show the hedge market risk, okay, which I prefer to do because I like to understand at all times what my risk management is. So again, this is how it comes out of the box. We have, we'll talk about these settings in a little bit, but ultimately this is the settings for the primary zone orders. This is the setting for the secondary. So if I want to make those different colors instead of all being red and green, absolutely that can be done, okay? That can be accomplished. So let's go out here, all right? We're going to apply the changes that I've just made. And remember, I've made a mistake, okay? So my position here is naked at the current moment. Well, I definitely need to change that. So I'm going to go here. I'm going to go back down. Intuitively, attach OCO is recognized again. And I'm going to attach that, and I'm going to bring it. I'm going to make some changes here. Again, I can move my target. Let's say I want it 4860. These are all, I'm not necessarily going through actual, what we would actually do or move these to. Right now I just want to focus on the features and functionality. That being said, watch the difference when I submit this, okay? Now, as I mentioned before, now you see the NinjaTrader standard order labels, okay? They can still be managed accordingly, but that's what they are, okay? So these are now sitting, not only on the local machine, these are sitting on the exchange itself. Okay, so that OCO is going to be attached to this position even if the power goes out or something like that, okay? So let's say I also want to go ahead and protect this investment. I could drag that trigger line down, okay? And what it's going to do is automatically move that stop to break even plus commissions. So now there again, I'm controlling and mitigating any version of mistakes that I may or may not make, hopefully not. All right, so that's how this will function. So let's say, okay, great, I have submitted my position, protected it on the E-mini, but now I want to go hedge against it with the micro E-mini. Excuse me. Remember, I can hover my mouse over this at any time. See the market there is the S&P account SIM 101. Let's do this. Now it says MES account SIM 102. So I can bring this and I can hedge, right? I could hedge against this with an OCO order. And I want to go back for just a second. Let's say that I didn't want an OCO attached. Maybe I just want to literally hedge the market and I'll close it if and when I'm ready. So all I have to do, toggle the OCO off. Now I go hedge against it. I'm going to pull up a short position, but notice there is no OCO labels there to attach. Okay, so I can see here I'm submitting to the micro E-mini at such a price point on SIM 102. All right, just like that. Again, I could go and I could go back here, toggle this off, re-enable the OCO bracket, and then do it all over again. When I have an OCO attached, note that there are going to be currency and risk values because it can calculate your corresponding risk on the hedge instrument. Okay, so yeah, so let's say that I want to hedge against this and I want my stop. I'll put my stop maybe just above that structure high here. Okay, feeling pretty good about this, so we'll pull this up, maybe go ahead and get it filled, and I'm going to submit that entry. If it touches the label, you'll see how this functions. Let's go ahead and just drag it down and get it filled. Yeah. Okay, there we have it. So now what we see is what we call a placeholder. Okay, this placeholder is going to just maintain, it's going to stay on the chart, and it's going to let us know, hey, that order was actually filled, and in addition to that, here's your current P&L on it, right? So I'm up 13 hypothetical dollars in the on the S&P position, right? And then I hedged against it to soften the blow, and or even make additional if it decides to decline, right? And in such, I am now negative $50. So take away 50 from this would be You know, if I were to go ahead and close out all positions currently, I would be 1700 minus 8750, right? Okay, so again, this is a means of hedging. That placeholder, of course, cannot be moved at this point because it's showing you where the entry, just like you can't go here and adjust the entry, right? It's stuck where the entry is. However, I can certainly still adjust my OCO. And one thing I want to be mindful of is let's say the current calculations are being maintained, okay? So what we have is the trigger line as well as the target. Notice when I move the stop, the trigger line and target are moved as well. And the reason for that, if we go back into the settings over here, I'll just bring those back up, okay? In the order inputs, I can go into the order inputs and I can go to the primary, okay, and or the secondary. In this case, let's go to the secondary because that's the ones that I'm manipulating over here. And if I go down, okay, you'll see all of the settings there, but specifically the multiplier. So I can go into this and I can manage my risk by either ticks and or dollar value. I typically leave it at a tick increment, and there are so many bells and whistles behind the scenes functioning at all times, little convenient bells and whistles that we try to implement, such as to say right now you can see that I have 1,000 tick max risk. Well, that sounds huge, right? Indeed it is. But when I apply that to the chart, we have our labels auto adjust to the chart itself. So for example, when I first toggle these on, it's going to intuitively recognize the top of the chart and the bottom of the chart, and it's going to leave the stop and entry inside the visible area. So it may not actually submit and or visually submit at 1,000 ticks. It's just going to utilize the width and or height, rather, of the chart in itself. I did that because if I have a large risk, for example, it became quite annoying for me because what I would end up with is something, you know, like this, right? So it would you know, go up there and it would be at 1,000 ticks, so which is something like that, okay? But with my chart, I would not know where those were, right? I'm looking at it and I'm saying, well, I don't even know where that is. So I kept having to scrunch up my chart. Okay, there's the order, bring it in. So yeah, it just doesn't do that, right? So now what it was, so it just executed the break-even plus commissions, okay? And as you'll see here, our P&L is now 81 on the positive side. The parenthesis around it is the negative value. So you can see up here our risk would be 1731, our break-even point would be 1718, and then our risk, reward, potentially reward on the downside would be 3,443. Again, it's just tracking all of that. So now I can take this, bring it down, again, adjust it however I want. If I don't want it to maintain the calculations, because here's the multiplier, it's going to say 2. So the entry and target, if you will, it's going to be a 2-to-1 of whatever my risk is. So currently I have 102 ticks at risk, okay, and it will maintain the 2-to-1, and of course it will be slightly adjusted by the offset of an entry. So I used a market order, so it was offset by a tick or two, right? A little bit of slippage there, yeah, no big deal. But that's why you're seeing, you know, not the exact, like for example here we have, let's see, 100 and then 197. So it's 3 ticks, you know, off of the actual fill price, okay? Just because a market order provided a little bit of slippage. All right, so what if I don't want to do this and I don't want to maintain that specific 2-to-1? So for example, look at a couple things here. You can see right here in this setting, we have a multiplier of 1 because this is our break-even property. So we're saying at a 1-to-1, move to break-even plus 2, okay? So you can see the trigger line is at a 1-to-1, again specified there, and the target is at a 2-to-1 as specified here. Now we're going to make some manual manipulations, and if we see these lines over here, you see how they are solid. Watch what happens when I move the trigger line or the target, okay? Boom. Now that indicates the orders are no longer linked. which means that it's not going to maintain that calculation anymore. All done with that, okay? So if I wanted to, you know, I could reset the orders and have them recalculate again and so on. But we predominantly trade based on price action, so I may decide to, you know, move, okay, great, well, I'm going to move this down just above this prior support here, and then I'm going to keep my trigger line maybe just above this closer support, however you want to do it. But the point is, it can be altered, and then maybe I want my stop here, or maybe I want to have my stop here. It doesn't really matter. The point is, you can make the exact movements as you desire. In order to do it, I'll repeat, all you need to do is alter and or move the trigger line or any of the targets. Now I say any of the targets because there can be up to 3. You'll see here, target 1, so target 1 quantity. This is a default, so I'm going, every time I turn this on, it's going to default to 5 contracts. I can make, again, I'm going to go through this one time, make my changes. I may specify a 1 here, right? So if I have an account size that is compatible with 1 contract, you know, just make it 1 and it will always default to 1. It's then going to submit the target at a 2-to-1. But notice just before, just below this, okay, it's going to say target 2 quantity, and below that you're going to see target 3 quantity. So if I wanted to always have 3 targets, I can do that right there. So I could say if I want a total of 5 contracts, I could say, well, put me 3 here, put me, you know, 1 and then another 1. Okay, so that's a total of 3, 4, 5 contracts. However, target 1 would be at a 2-to-1. Let's say now I want a 3-to-1, and finally I would like a 4-to-1. So this can be adjusted however you desire. All right, just like that. So let's I can maybe come back to this in just a bit. I tell you what I'll do. Let's use some of the other features. I'm going to go here, right, and I'm going to close this position, just like that. Okay, so now that micro E-mini position has also been filled. I want to close rather. I want to go back over here and just apply this so you see what this would actually do. Remember, this is in our secondary orders. Okay, now when I toggle this on, watch this. Now you see 3 green labels up here, bright green. Specifically, I think they're lime or lime green, I believe is what that is, but either way, no matter. You can make it any color you want. Okay, so that's a situation. If I have my own strategy and I know that I always want to have 3 targets, okay, there we go. I can do that, and every time I toggle the orders on, I'm going to have those 3 targets. I can manipulate them. It's great. Beyond that, and I will tell you why this may not be necessary, so let's look at that a little bit. However, let's say that it is necessary. But let's say, nah, I really want 4 targets. Well, okay, that's a possibility as well, because once this gets, let's do this. So once this gets filled, okay, I'm going to move my targets up here, move my trigger line up, and I'm going to go ahead and get this order filled. Okay, so I'm going to submit it. I'm going to drag it up. All right, very good. So now we've submitted our order. It's been executed and filled. But I still only have 3, targets. If I go back over, remember we have the ability to scale as well. So if up here I have, 5 contracts, right? So that's going to be 3 targets, 3, 1, and 1. So a total of 5 contracts. I need to, obviously, I only have 5 contracts total. But suffice to say, I could go here and I could remove from the position. Well, what did that just do? That gave me a fourth. Target, right? Yeah, because I can scale in and out, at my convenience. So if I do that, let's see, I could submit to remove 1 contract. Let's see if I can get that removed. Okay, and now notice up here we've reduced and or had a reduction of that single contract. I only have 4 remaining. I still have 3, but I can go back in and add another one. What if I wanted 5, right? Well, I just had 1. I still have 3. So now I can go remove another one. Okay? That provides me the ability to massively scale in and out of positions. Conversely, I could say, no, I don't want to do that. Actually, you know what? I want to add that contract back in at a lower price value. Okay? In other words, let's scale back into the position. And now we have, again, a total of 5 contracts. Okay? So I could bring this down, try to go ahead and get that filled. All right? And now I'm left with 2 contracts. But you know what? Nope, I need to make another change because I'm really trying to scale in and out of this thing. So I can go, add back to, I can go add more right back into it. All right? So scaling in and out is a very nice feature, and I think is going to be substantially used by many. So as I said before, I would mention why I don't believe this is absolutely necessary. Simply because three targets here means that I have to have 3 targets, okay? But I'm not sure every time I trade, maybe it's different from time to time. So every single time, I don't want a total of 3 contracts, right? So what I want to do is go back into my settings here. First and foremost, I'm going to close this position, okay? And I'm going to go over here, I'm going to go back into my settings, into my secondary, and I'm just going to take that back down. Again, this is defaulted, right? So it just comes this way out of the box. All right, and then I'm going to go back and I'm going to put a total of 5 contracts. So I have only 1 target, right? Which means, just one, or one quantity, target 1. So I'm not going to have 3 targets anymore. I'm only going to have 1, okay? So I'm going to apply that. All right, and this time I'm going to sell the market. Notice there's only 1 target down here, okay? So I need to get that filled. There we go. Now I have an active position on micro S&P. I have my trigger line down here as well as my target. But remember what I said. So if I decide, you know what, yeah, I only had 1 target there, but I want that one to be really large, remember I can now go back in and remove from the position, which effectively is giving me 2 targets. All right? Very good. Very good. Okay. So we'll cancel that. We'll close the position. All right. And now let's go back in. I want to show you a feature called the entry zone. I love the entry zone. It is very unique and gives us some quite vast capabilities here. So let's say I just want to keep things standard. I want to keep things simple. And I want to take an entry, but I want to do it at a specific location. So if a lot of you, if some of you are like supply and demand traders or support and resistance traders, and you have a defined location that you're interested in entering the market, I can go here and I can enable my entry zone, which thereby enables the adapt option, or rather the option to enable it, okay? We'll come back to what the adapt zone means in just a moment. But now if I go turn on the buy entry, notice this rectangle over here, okay? This rectangle can be moved accordingly, and it's a location-based principle. So let's say that I want to really somewhere down in this area, okay? I need to buy the market, but I don't want to buy the market up here. Notice how it keeps snapping back, right? So it's saying, wait a minute, you're defining the area you want to enter at, so why are you trying to do that? If you want to enter way up here, you have a couple of options. Either move the zone up, and then you can, of course, move it, as far as the zone goes. Or, right, you can just simply go back, toggle the entry off, and disable the entry zone, okay? So again, I want to have that on for a moment, and I want to move this down, okay? So I'm going to move it to this location here, and now what I am effectively saying is I want to buy the market, but it has to be inside of this particular area, okay? Has to be there. In addition to that, we have other entry types, okay? So let's just use a simple one called an up bar entry. So an up bar entry, I'm going to switch to that. Notice how the entry is constantly moving. It's going to be moving and adapting with current price. So if I take the entry zone and do that same thing back here, And let's pretend that we get an up bar. Remember, that was the specified entry type, so it's an up bar. I could go submit that, right? Nothing's going to happen. Why? Well, because we haven't closed on an up bar. Now, in addition to that, even if we did right now, it would not do anything. Why? Because we're not in our desired location. In order for that order to get filled and or even execute, we would have to be at or within the entry zone. Okay? Now, I know some of you may not fully appreciate the capability there, but I can tell you, in my strong yet humble opinion, it is very advantageous. Our members thoroughly enjoy that, but we do, we do supply and demand trading, and it's not even so much just that. That's just our entry and execution method. But ultimately, our focus is to remain, on the right side of the market. Okay, so we're going to analyze the market. And we use simple things like we have a game that we play called Buy, Sell, Nothing, right? So we have all of that. And we'll go through that and determine what we should or should not be doing for that day. Should I be buying, selling, both, neither, and so on? And then at that point, we can, of course, use the entry zone to determine specific locations and say, yeah, if I want to walk away from the screener a little bit, I definitely want to take an up bar entry, but I only want to take it way down here, right? So I need price to drop down, give me an up bar inside of the zone, off to the races I'll go. All right? So again, bells and whistles, lots and lots of features. I need to go cancel this order. All right, and now I can simply toggle it back off. There's another feature here, okay? I want to talk about the adapt zone. If enabled, I'm going to go toggle this back on. All right, and remember earlier when I said that this was not going to equate always to 1,000 ticks? Do you see how it intuitively recognizes the bottom of the chart? So it's going to come within your visible area so that we don't have to go navigating around trying to find it. All right, so in this case it's 628 ticks. Who cares? That's perfectly fine. Now, if I want to adapt it, I could, I got to drag the zone, but I can certainly do that. Okay. All right, so let's get back to it. So I can turn this on, and let's say that I move it, I put it around that same location. All right, so it's gonna pull my entry down and all that. I could go up to the top of it, but not outside of it. Okay, because again, this is the specified location, right? In such case, if I want to get that entry filled, it's never going to do so until it gets down here. But what if, let me go back, I tell you what, let's switch the entry type. What if I said, you know what, I really want to implement an up bar, so I want a confirmed entry, right? Give me an up bar before I'm willing to take a position. And that's great. So if that happens and I have adapt zone enabled, this is very, very important. What I am telling it to do, in other words, the adapt zone feature, is telling it I'm looking for an up bar entry, so at minimum you have to come down into the area. But if I never get that up bar entry and price goes lower, do I want the zone to continuously adapt to the lower lows? Okay? So if I said I'm willing to enter the market today at this price value or lower, all I want to do is confirm my entry, that's when the adapt zone feature comes into play. Okay, so now if price continuously goes down, that's fine because the zone will adapt with it. It will continuously track the lower lows, and at such point, if we then get an up bar, boom, the entry will indeed take place because it will be within the zone in and of itself. All right, very cool. So nice feature. Again, this is one that we really want to spend some time on in order to truly appreciate the feature in itself. Okay. All right. Of course, we would want to submit that order, and so on. Now, if I go back here, I'll turn off adapt zone, turn off my up bar. Maybe I don't want to use the entry zone. Okay, so just toggle it off. Everything's super convenient directly from the chart here. All right, and I love that. So as I said before, it is our personality to want clean charts. We want to keep things clean, and so therefore having these abilities to never have to open the chart trader. I don't want to have to do any of that. I like real estate, okay? And by real estate, I simply mean all of the areas of the chart. I want to have all the real estate available to me because it just gives me a appealing visual aesthetic, right? It's nice. The more I add onto the chart, the more, you know, it just feels like more complexities, more information, more data, more things skewing my view, right? So if I turn on, for all intents and purposes, the chart trader, now notice I've minimized mine. You can grab it like this and drag it or what have you. But yeah, you see this is just taking up real estate on my chart. And then I have to go over here and deal with this. I got to deal with all the account. I got to deal with the ATM strategy. I just don't want to do any of that, right? And I know that sounds rather silly, but when you are actively trading, you know as well as I do, time is of the essence. So price is dropping hypothetically. Oh my goodness, what am I to do? I just want to enter the market. I don't even want protection. I don't want an OCO bracket. Turn it off, buy, just like that. Move it, submit, I'm done. Okay? That's how fast and efficient we can be with this. Cancel the order. Don't want that order. Need to go back and resubmit it way down here, or I could have just adjusted that and so on. But oops, okay, well now I've made a mistake because I really do want that OCO. Well then I go here, I toggle it back on, submit, bring it down, submit that. When this order is filled, you will then see the same thing happen. In other words, you'll see the NinjaTrader standard order labels both on the stop as well as the target. So let's actually do that, okay? I just want to show you. Now note, it's unlinked, so it's not going to maintain calculations. All right, so let's do this. There you go, okay? And just like that, I have my target above. There's my risk and reward, okay? Or rather, in this case, potential reward. Down here is the risk, right? And I can adapt this just like that, okay? All right, again, bells and whistles all over the place, and this is the intention, is to make our lives more convenient. Let's go back to, I enjoy the prop funding conversation. I enjoy the, you know, trade copier conversation. There are multiple trade copiers out there. I don't know if you are already using one or not. I do, however, know that they're, you know, they have become a little bit more popular in the industry. I would imagine, you know, for multiple reasons, but I believe prop funding has a lot to do with that. Now, depending on the prop firm that you're with, if you're with one, you may not need a trade copier. Why? Because essentially that's built into our software already, right? But the only limitation there is that we are indeed limited to 2 accounts, right? So remember back in the settings, we had the primary account option and the secondary account option. So if we have more than that, again, if we had those 20 accounts or what have you, that's where a trade copier is going to come into play. So I can, again, the benefits there are substantially. We can take and we're amplifying the trade copier's capabilities exponentially, okay? Because we can divide and conquer. We can do all of this stuff. I can submit orders to one market on account 1 through 10. I can submit them to this market and that account or those other 10 accounts, etc. And I can have the trade copier assist me. And you know, I could submit to one account, have it copy it into the remaining 9. The other secondary, I could have it submit to one of the other 10 accounts, have the trade copier, you know, copy it out to the remaining 9. Okay, so effectively, I'm trading 10 accounts here, 10 accounts here. You see how that works? Again, if you're trading, you know, if you're trading 2 accounts, you don't need that. You don't even need a trade copier, right? So I could just put prop account, you know, in primary, prop account number 2 in secondary, and that's all I need to do. Okay? All right, very good. So what I'm going to do here is just give a brief run through. Let me see if I'm missing it. There are so many capabilities built into this. It's quite vast, but I just want to see if I missed any of the really important notes off the top of my head. We covered, you know, these here, the visuals, etc. The primary, this is just, again, where we set up our default, meaning like when we initially turn on or toggle on the orders, this is what you're going to see, right? So again, if I wanted to see those 3 targets, I could indeed put, you know, 1 contract here, 1 contract here, 1 contract here, or however many I desire, and that's going to be our default. Of course, if we put too many, remember on the labels themselves, let's go back over here and close this position, okay? So on the labels in and of themselves, if I wanted to sell the market again, please remember I can adapt the number of contracts directly from the labels in and of themselves. So no, I don't want 4 on this one. I'm thinking to scale into this. Okay, so I don't need multiple entries. I can add or remove from the corresponding position. So in this case, I say, no, you know, I really just want to go for 3. Okay, very good. Submit that, all right? And if that is filled, well, of course. So let me get that filled here. All right. So now I have a total of 3 contracts, but I want to add in to make a total of 5. So I add to position. Submit. Right? Go ahead and get that filled.
Order filled.
Okay. So now I have 4. Well, maybe I want 5. So add another. Okay, and that way I could say, no, I only want to add another one if it comes back up this far. Again, effectively scaling into the position as opposed to entering all of them down here, right? So that's how, you know, how that will work. All right, very good. We can go back in, we close the position and get rid of all of that. We have, again, our break-even. We touched on this, but our break-even properties are here. So this is the general primary risk management area. We can also change the increment quantity. So when I'm hitting the plus or minus, this is how many I'm going to be going, incrementing up or down. So if I'm trading equities, I might want to enlarge that number to like 50. You know, let's say I'm typically going to trade 200, 500, you know, orders, something like that. Of course, I could just put 100 here, and every time I hit the plus button, it will add 100. I think you understand the point there. Okay. So with futures, you know, that's a pretty large number. With equities, not so much. All right. Now the add-on quantity is also the incremental value. When I go in and attempt to scale into the position or out of it, how many contracts or shares do you want to increment up or down when I hit the plus or minus? Okay. So this is your standard order label increment. This is going to be the add and remove increment. Okay. Or rather the add, excuse me, and this will be the remove. So we individualize those, giving you know, plenty of options. And then down here again, break even, you know, at 1-to-1, and then we want to submit that at break even plus 2. If I wanted to move a little bit further, I could specify 10 ticks above or below my entry, depending on the direction in which it is going. Okay, there we go. I typically like to have 2 or 4, depend if I'm doing swing trading longer term. Of course, I put a bigger value in there, maybe 10, something like that, 20, you know, a little bit bigger just to protect it and lock in a little bit more on the profit side. Okay? All right, very good. So that's what we have on the order suite. Again, I'm certain that I'm missing a ton, you know, but I don't want to keep you here all day long. And just wanted to touch on that. You just please contact us with any questions that you have, and we'll go into it. I think probably the benefit that I really wanted to focus on today is just the vast capabilities with this, and then the ability to amplify, you know, other tools. It's extraordinarily compatible with these other tools. Prop funding, trade copiers. Generally, maybe you don't need a trade copier if you're only trading 2 accounts. And things to that extent. Okay, so yeah, let's also do one more. Let's give one more user case or scenario. Let's say that I want to trade this market only. Now there's a feature here called reset to template. I've made some changes, so I want to reset it back to the way it initially was, the default template, in other words. Okay. Now you can see everything went back to normal. These are both going to be on SIM 101 account, going to the default instrument of the S&P. Let's say that I have a long-short portfolio or strategy, and maybe right now is a good time to look at this because we're trading back and forth between our supply and demand. We have a little bit tighter of a consolidation here. So we have supply above, we have demand below, etc., which we are indeed leaving from as we speak. But let's say that I wanted to play both sides of the market potentially. So an example here is I want to execute a breakout either way the market goes. If it breaks out on the upside, great, I want to be long the market. If it breaks out on the downside, great, I want to be short the market. Okay, so what I can do is I can set these both to the same instrument, same account, and I can go here and say, okay, I want an OCO, or perhaps I don't. You know, we could turn that off as well, and I just want to buy the market. Okay, so I'm going to buy the market if we break outside of this upper supply. That would be, you know, it's not something that we would personally typically do, but it's just a good example, I think. So I'm going to buy the breakout on the upside, okay, and I'm going to submit that. So now if price goes up, touches this, it's going to execute a long position. But what if I'm also interested on the breakdown? What if we break this lower demand zone and I would rather be short the market? I can then go into my secondary menu, turn off the OCO if I desire, and sell the market. So then I take this, put it where I want that breakout to occur, and submit that entry as well. Now I'm playing both sides of the market. So I should notate, it's very important that we understand you don't want both of these to happen, right? Because if you go up and you get long the market and then you decline, this is going to be a short or a sell position, right? So effectively it's just going to close out that long position. So if this gets filled, what I would want to then do is just go down there and cancel that, okay? I can even then remove it from the chart and I don't even have to worry about that, okay? Just like that. All right, but right now, let's say that I do, and I'm going to go back and submit it. So whichever one is touched first, great, take that side of the market. In the event, okay, in the event that I don't use a OCO or a bracket order, okay, let me go cancel this real quick. Let's say that, you know what, yeah, I do want a bracket order. So I can go back over here, all right? I need to toggle my entry off so that I see the available options. I'm going to toggle the OCO back on, but maybe I don't want a break-even trigger value. Maybe I just want the bracket, okay? So now I'm going to go do that, and I'm going to buy on the breakout here, and I want my stop to be below the range, okay? Just like that. So then I can go here, submit that, and if and when the long order label here at 48.37 is touched, at such point I will be long the market, and I will indeed have both a stop as well as my target above. Okay, so remember the target was defaulted to a 2-to-1. Maybe I don't quite want a 2-to-1, maybe 1.5 to 1, 1.3 to 1, wherever. Using price action, I can be more specific. Maybe I want it to be sitting right there at 4,900. Okay, so now notice over here they've become unlinked. Good to go. So now my entire trade is just ready. So takeaways, okay? Excellent tool to combine if you need the combination. If you don't, then great. So it's all built in here, you know, up to 2 accounts. So otherwise, if you're trading 20 accounts, Trade Copier can assist with that. Now, we are able to manage the position. We have all of the details that we, you know, should need. Very, very efficient here. If I make mistakes, I can fix that very promptly. And that is a very key takeaway there. If I make a mistake and I don't know how to fix it, I'm in big trouble. And what I found is when you go in and try to place individual orders, you're going to run the risk. What if you have a black swan event? Or what if you have a very volatile market? You could run into a very substantial issue. Let me tell you what I'm trying to say. So let's cancel this for now. I'm going to toggle this off. And let's say that I use the standard means of entering positions. Okay? So maybe not an ATM strategy. Maybe I just go up here and I say, okay, look, I want a buy-sell market up here. Okay? Or I'm sorry, a buy-stop, you understand. A buy-stop market up here. okay? And maybe we'll, amplify that to the 5 contracts as we were previously doing. So now I have a buy stop, but then I want to go down here and I want to submit my my actual stop order in the event that price goes against me. Okay, so now what I do is I have to go up here and determine, number one, okay, well, I'm buying there, so I know I want to go down here and sell. I want to sell stop market order. Okay, got it. So now I'm going to increase that to the 5 contracts. Okay, and then I'm going to go up here, 4,900, and I'm going to sell at a limit for a target, and I'm going to put 5 contracts. What have you just done? Well, in my opinion, a very, very dangerous situation. Let's say, okay, that we do have some news event, CPI, core, whatever, okay? We have some inflation data come out, or like we did this morning, which was pretty volatile. So let's just say that did happen, yeah? All right, so then what would happen is my thought process is that I want to be long the market. What if price does that? Nope. Now I've just been filled on 5 short positions, contracts, if you will, to create a total of 5 contracts short as a position. All right? So instead of this being my stop only, it actually turned into an entry. But let's say that it did that and then went right back up like this, because in a very volatile market, that's very possible. And let's say that it even did that. We're going to go crazy here, right? So as price declines, now we're short 5 contracts. It goes back up, closes that position out right here because the sell became a buy, right? So that effectively closes the 5 contracts out. Price keeps going. Now I've sold 5 contracts and filled on those, and guess what? I now have a naked position, okay? Which would look like that. That is a bad situation, because if I sold it up here and the volatility in the market did something like this, you have to be very mindful. That could be a margin call, right? You can now end up owing your broker more than you ever had in your account. These are very bad situations that can occur. So I just try to make people aware of the unfortunate possibilities, the risks, if you will, that can potentially happen, and then we try to mitigate them. So using our software, if I want to buy the market at such point, and I want my stop to be at such point, that's exactly what's going to happen. So in that same use case, price becomes very volatile, goes down, that's never going to get filled because it's not an entry, it's a potential stop. So therefore I need to do that, and then price goes back up, and if and when it does, this will indeed get filled. But if it goes and continues in the same scenario we used before, or same hypothetical, like that, what would end up happening is I would be filled on 5 contracts long, and then I would hit a target up here to close out the position, which would also intuitively cancel out the stop on the downside, right? So that bracket order comes in handy. So again, there's a lot of ways to mitigate these things. We just need to be acutely aware of them and follow through, okay? Now, I think I've taken enough time today. Here's what I want to do. I want to do a follow-up. We've been in here for about an hour and 20 minutes. I'm going to do a follow-up, and I'm going to separate out the products, okay? The PFAZoneSuite. As I said from the beginning of today's session, these 3 icons are technically 4. The one is to hide or display. But these 3 are what you're going to get in the order suite. The capabilities there, as you've now seen, are vast. So try to maybe review this and kind of go back through the features and functionality of it, how we can adapt the settings. Remember things like that entry zone. These are things probably you've never seen before. I know I don't think I've certainly never seen anything like that. We adapted and we built it because that's what we needed. Okay, so go back through, just kind of see the features and functionality, and wrap your mind around that. I think you'll become pleasantly surprised at what you're capable of doing with the order suite alone. In our follow-up session, however, our follow-up event, what I would like to do is I will touch on the Zone Suite in itself, and we will walk through each and every one of these tools. Again, in the Tools menu, these are predominantly used for automation purposes, okay? And then, of course, we have our supply and demand zones, which are going to be in this menu here. And within the zones, there are massive amounts of capabilities as well. We have all kind of bells and whistles, volume, order flow data, it's a lot, folks, right? So when we get in here, we can even open this up. We have dynamic text here. It gets larger. You can literally see the order flow at every level, right? And if I don't want to do it at the levels, I can go turn that off. I don't want to touch on this too much because, as I just said, we're going to do this in a follow-up session. But let's say that I wanted to do this manually. We have also built in a tool called the Power Zone, right? And I can put that over any specified area. Now, I will say NinjaTrader now has a tool similar to this. Ours does have indeed more bells and whistles. It's a little bit more convenient, in my opinion. You have push buttons. We can toggle things on or off. We can also, for example, we can extend and unextend, all kind of little bells and whistles. Also, it includes the raw data over here. This is the actual order flow that's been filled within this area. So there's a lot of bells and whistles there as well. But NinjaTrader has a similar tool. We, however, we did pioneer this, or we were the first to actually put it out quite some time ago. So if you want that, you need that, it is built in, okay? So in other words, you can do it directly from the zones, okay? We can do it like that. We can turn on our value area, volume profile, volume ratio, point of control, etc. We will again cover this in the follow-up session, okay? Again, hopefully, really hope that you enjoyed today. I hope that you can take away the capabilities, and I hope that you conceptualize how beneficial this can be for every trader. This is not something that is only beneficial for one. It's a convenience factor. And I can tell you, my opinion, in my experience, I never could have even imagined that I was going to have these capabilities. I don't ever want to trade without it. And the reason for that is because there's so many convenience factors. If I'm trying to calculate, like for even simple as the risk, if I'm going in here and I'm saying how much risk would I have to account for if I were to trade this demand zone, well, all I got to do is toggle it on. There it is, right? Oh, I know it's exactly $2,875 hypothetical dollars, right, at 46 ticks and so on. Just the little things. It's the small details, the bells and whistles that sometimes make the largest difference. So again, I would never want to trade without this anymore, and I am so very thankful and blessed that we've been able to accomplish all of this. We have, I'm going to call him a rock star behind the scenes, constantly working on this and implementing, very, very amazing features, and we're just consistently developing. If there's anything we ever need, we go on and develop it, right, to make the most of what we have. So, without further ado, if you have any questions, please contact us immediately. Email, you can do that directly from the website. I'm going to put in, our direct email here. Okay, so you can email us directly there at support@purefinancialacademy.com. So whatever works for you. And then again, stay on the email list if you want invites. We'll definitely get you that follow-up event where we can cover the Zone Suite. And I will be sending out the remaining information. If you were provided some details exclusive to certain companies and so on, we'll be sending that out via email. So please look for that. Okay. God bless you all. Have a fantastic rest of your day. And just kind of keep up with us on social media, things like that, if you want to see some of the educational trades that that we do, and we try to keep people updated with that. Okay. Look forward to hearing from you all. Take care. Have a wonderful, as I said, blessed and wonderful rest of your day. Also the weekend. See you all soon. Bye for now.